What is going on, family? It's your boy, Lowedaddy, Lowrider, Lowstradamus, the Dollar Store TC, whichever way you want to chop it up, and whether you like me or you don't like me, somehow you can't get rid of me. Because you guys have been asking me about this company for a long time, since back in September 2020 when I first put some money into it. Now, the time has finally rolled around. I have some time on my hands to do some more research and put together a video where I can tell you exactly why I love this company and exactly why this company is going to give me 1,000% gains at the very least. We're going to get right to that, but before we do, please remember to smash that like button, smash that subscribe button, and ring the little bell next to it so that you get notified every time we go live, every time we drop new videos, and we're making money up in here, which is every single day the stock market's open, folks, except for some days. With that being said, let's get into it. All right, so what is this mystery company? Now, those of you who've been following along with me since back in August, September, I'm sure y'all can guess what the company is. But for the rest of y'all, the company that's going to make me over 1,000% in returns when it's all said and done is Opendoor. And what Opendoor does is they offer an iBuying solution to the real estate market. So what that means in simple terms is you, me, anyone, we can sell our homes and we can buy new homes straight through their platform, whether it be their app or their website. So pretty fucking awesome. Now, really quick, before we move forward and I tell you exactly why I love this company and it's going to the moon, I do need to give you this legal disclaimer. Again, the one that y'all love. I am not a financial advisor. Everything you hear is my opinion and my opinion only. I'm an online marketer, so do not take my financial advice because I'm not legally qualified to offer it. Do not buy a stock just because I tell you that I like a stock. Do your own due diligence. Now let's go ahead and move forward so I can tell you why I like this company. Alright, now that that's over with, we can move forward. So let's start by saying, one of my favorite people to go to for investment advice and investment wisdom is one of the greatest investors of all time, Peter Lynch. And he says that you should never, ever buy a company or buy a stock just because somebody tells you this sucker's going up. And the same goes for here. Don't buy this company or don't buy this stock just because I tell you I like it a lot. Go figure out why you like it too, and so you can understand it. That's what he says to do, is make sure that before you buy into a company, you understand it, you understand the business model, and you understand where they're headed to growth-wise. You can kind of picture it in your head because you understand the company that well. And how you know you really understand the company, though, is you can explain it to a 5-year-old. And when they hear you explain it, they can understand it themselves too. Makes sense. That is explaining it at its simplest concept. So we're going to move into my favorite segment. Explain it to me like I'm 5. All right, my favorite segment, explain it like I'm 5. Now in this case scenario, we're going to call our 5-year-old Sally, and you're going to play her. And I'm going to tell you why I love Opendoor so that hopefully you can understand it at the same level that I do before we move forward into the nitty-gritty of things. So, Sally, I'm going to go ahead and assume that you've never sold a home before because you're 5 years old. So here's how it typically works. You're going to spend, a lot of time and money getting your house ready to be listed on the market. So you're going to spend time repairing things that need to be repaired. You're going to spend time renovating if you want to get more money for your home than it's currently worth. And it's going to take, like I said, a lot of time and money to do that. And when you have done that and you've listed it on the market, people, random people, I know, stranger danger, they're going to come start walking through your home for months and months on end. And you're hoping that they love your home and they come away thrilled and ecstatic, and that, the end result, they give you an offer that is equal to or higher than the price you're looking to get for your house. Spoiler alert, that doesn't happen that often. Oftentimes people are going to come in lower than what you're looking for. They're going to try to negotiate with you. It's just going to be a huge headache for you. And once you do come to an agreement, it doesn't end there. Unless they're giving you a 100% cash offer, which means they've got the money, all they need to do is wait for things to get approved by the title and escrow company, the inspectors come through the home, whole 9 yards. We're not going to get into that though, Sally, because you're 5. There's just a lot of complexities that go into this as well. Unless they come in with a 100% cash offer, all of those things can go perfect and they can get declined for their mortgage request. And at that point, they are no longer eligible to be your buyer, even though you went through all that. You need to either start all over again, or hopefully you've got other buyers. So, long story short, Sally, between me and you, selling your home traditionally is a pain in the ass. Now, Sally, now that we're on the same page as to what a pain in the ass it is to sell your home in a traditional real estate market, let me explain to you what Opendoor does. Let's say that you or me, we want to sell our home. We can go onto their platform. We can go ahead and enter our address, maybe some extra information that we want them to know about our home, like anything we've done recently with it that they can't see online elsewhere. And within 24 hours, we're going to have a 100% cash offer in our inbox that we can accept, decline, or counteroffer. And once we come to an agreement with them, we get to decide when we close on the house, like how soon are we moving out and how soon is that money going to leave the escrow company. We're going to transfer our title of ownership over to Opendoor, and their funds are going to get transferred to our bank account. We get to decide anywhere between 14 and 90 days. Once we set a closing date or a closing target in there, they're going to go ahead and they're going to take care of all the other tedious things that aren't usually taken care of for you, that you need to go and find, other third parties for, such as the inspector is going to come walk through. If there's anything that needs to get repaired, you'll walk through with them and you can negotiate, a new price with them if you need to. They're going to make sure that basically everything gets taken care of, Sally, until they say okay, you say okay, the house closes on, and like I said, that money enters your bank account, and your title of ownership of your home goes over to Opendoor, and now they own the home, and you own the money. That's why I love Opendoor. Now let's get to the adult stuff. No, seriously, it's that simple. I'm going to get into the market size and everything that I love to look at, in a second, but it really is that simple. Selling your house traditionally is a pain in the ass. I've never sold a house before because I'm 25 years old, but fortunately, my mother has been a real estate agent for well over 10 years now, and I've gotten exposure that way. So I know what a pain it is. I've asked her questions, while I've been invested in Opendoor to kind of confirm my feeling that I want to be invested in this company for the long term, and I do think it's the future. And it's nothing against real estate agents, it's nothing against my mother, but sorry, Ma, Lowedaddy has been to the future. And it's fucking way more convenient than it is today. So that's why I love Opendoor. Now let's get into the nitty gritty. All right. So one of the key things I'm looking for when I'm investing in any company is the market size, the total addressable market. Now, the best way to picture that is just a big old pie. And the bigger this market size is, the bigger the pie is. And if we can capture a small sliver of any of these pies, well, obviously the bigger pie is going to pay us more money, right? So let's talk about, to give you an idea of the size of Opendoor's total addressable market, let's go ahead and talk about something that's more familiar to us. Something that's been a hot commodity as far as the stock market goes for the past year or so, the EV sector, right? Electric vehicles. Now, as it currently stands, you're looking at a little over $150 billion. And these statistics that you're hearing are coming from alliedmarketresearch.com. If you don't agree with them, go do your own research. I'm just trying to save you some time here. A little over $150 billion annually. And that's projected to grow by 2027 to a little over $800 billion annually on the global scale. Now, Opendoor, on the other hand, their total addressable market is 1.6 trillion with a T dollars annually in the United States alone for residential real estate. So that's a pretty fucking big pie that, spoiler alert, we're winning in capturing right now. So that checks a box for me right there. The next thing we're going to get into is going to be teams and people attached to Opendoor. Now, I've talked about the team before with y'all and why I look for it and why I know to look for it. And it's because of my experience in entrepreneurship over the past 5 years. And 5 years ago, I've talked to some of y'all about it before too. I helped co-found one of my first companies, and we spent 3 years working on that project, and we raised, when it was all said and done, a little under $1 million in funding, which is nothing crazy, but it's not chump change either. It wasn't like just some fun project that people were doing in the basement. There was real money involved there, and a lot of the pushback that we would get by more and more experienced investors was that one, we had a great idea, but it's a cliche saying, they wanted to invest in an A plus team with a C plus idea rather than investing in an A plus idea with a C plus in our case really is like a D or an F, caliber team as far as experience goes. And at the time it's hard to accept, it's a tough pill to swallow, but when you're investing in companies, you need to be looking for the same thing too. How much experience these people have. Now, I've explained this before on my live streams. The reason that a team is so important in any company you invest in is because that's who's driving your ship to its destination, right? Even if you believe in the mission it's on and you believe in where you're going, if you got a captain that has 3 DUIs, you're in bad hands, right? So you need to look at, their experience, their trustworthiness, their believability, their leadership. That's your CEO in this case. And then, just entirely, you want to look at your C-suite and your executive team, their experience, their track record. Are they experienced in doing what you're looking to do? Because if you're looking to go to Mars and you've got 3 people on your ship who have been to Mars before, well, you could feel pretty confident that you're going to end up at Mars, right? So let's dive into that a little bit. Now, as far as their day-to-day team goes, I'm not going to speak too much on them just because it's going to be extremely biased. Of course, I like them. That's why I invested in the company in the first place. Eric Wu, their CEO and co-founder, he's young, up and coming, but he's got a good track record already as well. He's well-spoken, and I think he's a solid leader. And that's what I've seen in most of the reports I've read as well, is that people in the company agree with that. As far as the rest of the team goes, I'm just going to go ahead and just drop a link in the description so that y'all can check them out and come to your own opinions. Start doing your own research and due diligence if you're going to invest in this company or any company. I think that might be more effective here. So I'll do that, and then I want to go ahead and just dive into the people attached, which are actually what pushed me over the edge here before considering anything else that we'll get to further on as well. The people attached really do impress me. So for people attached, you're looking at someone who's been in the news over the past year or so, and people have their own opinions on. And if they don't like him, I don't give a fuck if they like him or not, because I've been following the man for 5 years now, since I got into entrepreneurship. He's been someone I looked up to because he's that smart, he's that real and authentic, to where I do believe in a lot of what he's doing, and his track record speaks for himself. He's way smarter than me, and he's way smarter than probably the majority of people who are on YouTube right now. Chamath Palihapitiya. The dude's, like I said, his track record speaks for himself. He started off at AOL, and he was in charge of what? Growing AOL, specifically the AIM sector of AOL. And I'm pretty sure all of us probably had screen names on AIM and used that back in the day. Unless you're young or you're too old or whatever the case is, AIM was a pretty big deal. Then from there, he goes on and does a few more things until he stumbles upon a little company in year one called Facebook. And he's in charge of user growth on Facebook. And I'm pretty sure probably all of us, or close to all of us, have Facebook as well. So he knows how to grow shit. And you can say whatever you want about the man, but his track record speaks for himself. That's why he doesn't have to give a shit what we say about him. He can keep investing. He knows what makes a good business, and he knows how to grow a good business as well. So I love having him attached here. Number 2, person attached to Opendoor is arguably one of the best growth minds in the world. Some would argue even better than Chamath himself. The man, the myth, the legend, from the PayPal Mafia, Keith Raboy. Now, like I said, one of his earliest experiences does come from PayPal, where he was the executive vice president for a little over 2 years there, in charge of business development, public affairs, and policy. PayPal ended up being super successful, so definitely a good thing to have on his track record. Also from there, in 2005, with some other PayPal co-founders, went on to become vice president of business and corporate development over at LinkedIn, if you've ever heard of it. From there, he went on to Slide for a little over 3 years, where he was the executive vice president of strategy and business development. How did that end? Well, they ended up getting sold to Google. From there, he went on to become the COO of Square. Square, pretty big company, right? Currently, he's a general partner at Founders Fund, which is Peter Thiel's fund, another PayPal Mafia member. And then he's also been the managing director over at Khosla Ventures, which is another venture capital firm. So this guy really does have a solid track record, and he really, really, really knows how to grow shit. So I love having him attached to any company I'm going to invest in, especially Opendoor, because this was his idea since 2003. He told it to Peter Thiel. Peter Thiel's been vouching for him. He just needed someone because he didn't have the time on his hands to run it himself. So he found someone to run the company for him, Eric Wu. And if one of the best growth minds in the world has been thinking about this company and this business concept for almost 20 years now, something tells me he's got a lot of ideas out there as to where he can go with this, way more than even I've considered in 6 months, and way more than, any of y'all have probably considered if you're just getting familiar with Opendoor right now, or if you've just become familiar with them this year. So great guy to have attached to your company. That's why I bring him up. Now we're going to move forward. We're going to go into my favorite thing, the numbers. So for the past year, we've been seeing a lot of companies go public through SPAC. And a lot of companies that I've argued before probably shouldn't be going public at this stage of their company. They're going public because they need to, or because this is an opportunity for them to go public and make some money, because people are investing into companies at unrealistic or unheard of valuations, specifically companies that are pre-revenue, that haven't made a single dollar yet. I like to avoid those companies, because if the market crashes tomorrow and it doesn't recover for 5 years and they're being fueled strictly off of people buying shares in their company, we're in trouble. They might not be around 5 years from now. So if my company is making money currently, well, there's a better chance that even if they're in the early stages, they're going to be around 5 years from now. So Opendoor, for example, in 2019 made $4.7 billion in revenue. That's where their valuation came from when they went public. They had a $4.7 billion valuation. Now in 2020, they took a step back because they stopped buying homes, they reduced their inventory, and they unloaded their existing inventory because they didn't know what to expect. I like to see that kind of proactivity in any company I'm invested in. That shows me it's a strong and it's an active leadership team that can make decisions like that when they need to. So their revenue reduced from $4.7 billion to $2.6 billion. So big reduction, but they made a move they had to, and 2020 was anything but a typical year. Their competitors did the same things too, and I'll show you their numbers when we get into the competition, which should be coming up next. The one knock, when we're talking numbers, and I got to be fair, the one knock that I always hear Opendoor get is the profitability. Right now, they're not profitable at $4.7 billion because they have so much money invested in growth. They're not making money right now, but what we need to be looking for if we do invest in companies like that is we need to make sure that our profit margin is increasing quarter after quarter, year over year, in our favor, in the right direction, because that gives us faith that the company is heading where we need it to be. Because I think long term, this company is going to make me a lot of money, and it's going to make anyone who owns shares a lot of money in the next 5 to 10 years. I think they will win the market. But profit margin, that's something that you're going to hear people knocking on, and I can't blame them. I probably would too. Other than that, pretty strong company. They had over 18,000 transactions go through their platform in 2019. That got reduced to a little over 11,000 in 2020, and I'll go, into further detail of that coming up. Now, competition. This video is getting a bit long, so I'm probably going to chop it here. Competition. Your competitors you're looking at are going to be Redfin, OfferPad, and the biggest competitor is Zillow, but specifically their Zillow Offers sector of the company. Currently, they are crushing their competition, and I'm not going to go into too much detail as to why I say they're crushing their competition right now. The numbers do speak for themselves, but because we're running a bit long right now, I am going to put a link to the video I make specifically about their competition, because it's going to be a long one also, in the description below or somewhere around here. As soon as I have that published, it should be published in the next day or two after I release this video. So bear with me there, but it should be a nice comprehensive breakdown of where they stand with their competition and why I believe that they're blowing them away, why I say that, and why I believe that they're going to continue to blow them away and ultimately win this market. And we're going to see that 1,000+% return in the next 5 to 10 years that I said. If you said, "Oh, Mike, I didn't know you meant 5 to 10 years," well, I'm not here to give you a get-rich-quick scheme. I'm sorry. I know there's a billion people out there making millions off of penny stocks right now. I don't invest like that. I'm invested in this company because I believe in it, long term. I believe they will win this market. I believe it is a very juicy market to win. And when they do win it, they're going to give us that return at the very least, and then some. What I can tell you in short, though, is that they are bringing in more money revenue-wise than any of their competitors are still. They're doing more transactions than any of their competitors are still. They're in more markets and they're in more states than any of their competitors are still, and they're expanding at a more rapid rate than any of their competitors are also. So that is, my brief summary of the competition. Like I said, I'll show you in more detail what's going on exactly with their competition in my next video. But this one's getting pretty long. I'm sure there are things I'm forgetting, but I could sit here all night talking about Opendoor, and it is about midnight in Chicago right now, and I gotta be up because my boss is an asshole. I am my own boss. Um, Early in the morning to get to work. So I hope you found this video, insightful. I hope that there's information in here. I'm able to transfer, my thought to you effectively. I'm sure there are things I'm leaving out as well, just because it is so late at night. But again, I've been trying to get this out for y'all for a while now, and I finally have time on my hands, even though it is at midnight. I am trying to, get this kind of content out there for y'all. So let me know what you think. If you think I'm wrong, if you think I'm biased and I hate your companies and you hate my company, that's okay. We don't all have to like each other's companies, because if we're all invested in good companies, it doesn't matter what I think or the next guy thinks. If you're invested in a good company, it's going to succeed whether someone tries to short you or not. I don't have to worry about Hindenburg because I believe all my companies are strong. Even if my stock price drops $5 today, well, a year from now, I think it's going to be worth double than what it is today. It's as simple as that. I'm not really worried about my stock price on a day-to-day basis. That's where people get themselves messed up, is they worry about the market on a very micro scale. They look at, the charts and, ooh, green candle, ooh, red candle, what's going on? That's a really hard game to play. I've tried it, and I tip my cap. I'm not trying to belittle any traders out there. It's a game that's not for my heart, and it really does, make you question everything going on. It makes you feel like everyone else in the market is out to get you because your options and your trades aren't going great. I don't play that game. So I don't care what the stock price is today. I don't care what it is tomorrow. All I know is that if my company is around 10 years from now and it's growing in the direction that I believe it's going to grow, it's going to be worth a shit ton more money than it is today. So with that being said, if you agree with me or you don't agree with me, let me know in the comment section below. And if you haven't already, please, please, please smash that like button, smash that subscribe button, and ring the little bell next to it so you get notified every time we drop new videos, every time we go live, and we're making money up in here, which is every single day the stock market's open, folks, except for some days. Other than that, it's been a pleasure. I hope y'all do enjoy this, and wherever you're watching, have a good day, have a good night, whatever time it is there, just have a good time in general, spread some love, and I will see y'all next time. Peace out.